So I'm going to show you today a great strategy for options with low risk and maximum gains, okay? So first off, if you don't have Robinhood, that's my platform of choice for this strategy since we can do custom orders. I will put a link into the bio to sign up. You can get up to $200 in stock for signing up. Before we start also, I will also have a link to my private Discord channel where I will do basically callouts dailies, 1 to 3 callouts, and here you can see we've been very profitable lately, and up to 60%, 40%. We've been actually doing really well on the callouts, 35% gains, and here are some of the profits that people have been making, including myself. So we'll have a link to that into the description as well. Now let's get started. So once we're on Robinhood here, I'm going to use SPY, which is the S&P 500 ETF, as the example. Alrighty. So first off is trading options here. Just want to start at the option page for SPY. Before we start, I just want to say I'm not a financial advisor. Please don't take any of this as financial advice. Always consult with your accountant before making any financial decisions, okay? This is for entertainment purposes only. So what are we going to do here? Okay, so first off, we are going to sell a call, okay? But we have to say, you have to pick a price, a range of a price of where do you think SPY is going to end up, say by April 10th, right? The peak of that price is what we're basically picking right now, okay? So let's say I'm going to think by April 10th, it's going to be at 404. So what I'm going to do, I'm going to sell a call at 404, okay? Now we're going to switch to buying a call, okay? This way, we don't have to put the full collateral of $477. It kind of cancels out, okay? And you want to buy a call at a strike price above the 404. So I want to do a range of 406 to 404, okay? So we're going to buy a 406 call. Now we're going to buy one more call below the strike price that we sold. And you want to keep it in the same length as the one above. So if you see it's 405, then 406. So down under it'll be 403, then 402. So we're gonna buy a 402, okay? But we're not quite done yet because we go over here on customs and we have to edit the ratios. You do not want a 1:1 ratio. You actually want to buy, or let's see, you want to sell 2 of the 404 calls. We're selling 2 of these. So we're selling 2, and here we have it. So then you get this bad boy right here, okay? This is the position you're in. So as you see, we have max loss of $24. All right? That is the max this is going to cost you. So you will pay $24 for this position. Max profit is going to be $176. All right, that's almost, what's that? It's almost like 6x almost. All right, so it's actually 7.3x. Okay, it's 7 times your money just from this one option if it lands perfectly at 404 by April 10th. But let's say it's 405 or whatever, 402, 405, you're still making $59. 402, 403, you're still making anywhere from $40. Okay, as long as it stays in the range of 402 and 405, okay, you're in the money by your expiration date. And you can easily grow a small account with this strategy with minimum risk. That's kind of what we're looking for these types of strategies, is minimum risk. You can only lose $24 if this goes out of your zone by that date. Now you don't have to wait for the exact expiration date. Let's say, April 8th comes in and it's at 403 or 404. Well, you're going to end up actually making money still. You can even find out on Option Strat on exactly how much you would be making through that as well. Okay, so we're in Option Strat, okay? You go to Option Strat. This gives you kind of a clear exactly of how much money you can make at a specific price by whatever date it is. So it's like a little bit, it's way more information than just whatever Robinhood gives you. All right, so what did we say? We decided to sell a call at 4:04 for the expiration of April 10th, I believe. Okay, so April 10th, we decided to buy a call on 402 and 406. And I believe we have to sell one more at right here at 404. Okay, so here we go. That's exactly what we're doing. As you can see, $23 debit. So your max loss is $23, but your max profit here is $177. All right, you do need it to get it in that range by expiration date, okay? It's gonna have to stay around that range by expiration date. And you're looking at, anywhere from, what was that, 406 to 402, okay? Max profit's gonna be right on that money range, 404. You can even look at the graph, and there you go. You can see exactly how it goes. Now you can even spread